Very much, John. Appreciate it. Welcome everyone to our Wednesday's class presentation. It's wonderful to have you. With all the pundits talking about their predictions for the new year, the 2021. This is the time of the year everybody comes with their your objectives and their again outlook. What's going to happen? I'm not good at predicting things. I don't want to be in that business. But I thought we have a different path. This time we always talk about the trading, short-term investing and swing trading. But this time I thought maybe it would be a good idea to have a little longer-term outlook. And uh, I'm going to emphasize more on the themes, on what I feel is applicable for the following year and maybe years to come, rather than specific companies. And uh, basically, what will happen is allow you to do your own research and have, more conviction in what you are looking at, rather than me telling you, well, this is a great company, go invest in it. By having the themes, it gives you more options, and you can actually do you can take the path that you want. One of the reasons I wanted to do this is something we did after COVID. It's one of our, right about a few weeks, a couple of weeks after the meltdown in March. And at that time, again, we didn't come up with specific stocks. And I just want to go back and remember this was some of you were with us at that time. And I suggested investing in ETFs are actually a much better alternative than individual stocks. Granted, if you were like in Teslas of the world or Neos or, even Amazons, and you would say, well, they did great. But having a portfolio of maybe exchange traded funds, they actually achieve the same objective with more diversification and actually less vulnerable to the individual and systematic risks of the individual stocks. So that's why I like to look at the big picture. And every week, as you know, we go over the macro economy. We look at the big picture, we analyze it, and we look at the intermarket relationships. This time, I want to look at. I'm not going to talk about the bonds and what's going to happen to the equities. And I'd rather look at some of the themes based on the year that we had and my outlook for the again upcoming year, and some of the things that I feel are primed to do well in this environment. And based on that, I make some suggestions that where you should invest if you agree with the theme. So, and again, I'd rather look at the big picture and pick the themes from that. So what we did, again, it's almost exactly 9 months ago, was we looked at the theme with the COVID, people being at home, it not being able to go to work. We suggested, well, at that time, this will be a good time that people should invest in internet and cloud storage companies. The kids are going to be staying at home. They couldn't go to school, so the gaming technology, that will be something that it will do well. The Internet of Things, the artificial intelligence. At that time, ETF was at work. It was work from home, so it hadn't actually launched yet. We suggested that, and then we thought maybe with all the things going on, the government would invest some in infrastructure, and that was paved. And those were the suggestions, and they were the six. So I want to show you, these are the results of, this is around the time that we did. And again, they were not sexy stocks. It was not like aggressive exotic stocks. They were just themes. And the average of these stocks, Cloud, Hero, Sensor, AIQ, work from home, and Pay. If you had this portfolio, just these six portfolios for the past 9 months, your portfolio would have been up about 50%. So it's just the idea that you can actually use. So, and that's the theme I want to go with for this year. One of the things I had mentioned a few months ago, we were looking at, again, the things were really we had the second wave. It's September. Things are not looking good. And I mentioned with this, again, the crisis brought innovation and a lot of things that were supposed to be happening in 5 years, 4 years, and technology-wise, they were contracted. And we talked about Pepsi Cola, what the things they do. It's not just the technological companies. All the companies, they had to speed up the process in order to achieve their objectives. So this crisis forced us to do things that it might have taken years. And look what happened just in the vaccination arena. And what happened. So there's that capacity, our human capacity is unbelievable. So that gives us hope, that gives us optimism about the future. And as much as, again, we look at from the political point of view, what is happening to our country and the world, but from the, again, technological concept, there is a lot of things that we are hopeful. So some of the things I mentioned a few months ago, we talked, this was even actually for vaccination, the medical advancements. Imagine what we did with vaccination, how much faster things are going to move now. The electric cars have been obviously a big subject, and with that comes the self-driving trucks and cars, agricultural innovations, which will help with the feeding the people and the nourishment, and obviously the 5G, the virtual technologies. We looked at artificial intelligence, the alternative energy, and last but not least, the blockchain. So this was the ideas that we presented a few months ago, and I'm gonna follow up on that with this theme and go forward. And uh, and again, live on hope and innovation rather than despair. So the first one, which is timely, the first theme I would represent, the idea is about pandemics and the vaccination. So this will be a theme for this year. And again, we will follow it because of the advancements of the medical technology. And I think the things are going to speed up. So we can work on that. So I call it the COVID vaccinations. That gives us some opportunities to invest in some of the companies and the themes. Now, from the medical side of things, the companies that are working on the vaccinations, some of them have been around for, they've been working on it 9 months ago, 6 months ago, 8 months ago. And I feel I had mentioned about J&J's capacity once they get involved with this, how much faster things are going to happen. Moderna obviously has had a fantastic, obviously, increase in stock price, and while Pfizer hasn't. Again, smaller companies obviously they have more of a profit margin in the sense that they are not multi products. So something like Pfizer or J&J, it doesn't affect the stock prices as much as, let's say, smaller companies. But these are the companies' ideas. You can research them yourself, but I thought I'd give you these ideas that they are very much involved. BDX is another one. But it doesn't stop there, because especially with like the Pfizer, that the freezing, the distribution of these things. So it's good to have the companies which are supporting this. And I wanted to show you some of the air conditioning and ice, dry ice, and again, the refrigeration of those companies, as well as FedEx has been very much involved with the distribution of it. So I thought these are the ideas. I'm not going to go one by one, but just this is for you to just pursue further. And there was something interesting. It's the Physicians Realty. It's a DOC. They're the testing grounds, and basically there are REITs. But I thought they might be attractive. They pay about 5.6% dividends. So it's a food for thought. As much as we are not keen on like a retail and commercial REITs, but specific REITs like this, it looks attractive. So that was our first theme. The second theme in this situation is artificial intelligence. As I mentioned, we have really contracted the things that we were going to achieve 5 years from now, and it happened now. So for that, I look at the data centers and besides all other companies. So these are some of the ideas for you. Again, you have the slides and from Broadcom of the world to obviously Advanced Micro Devices, Micron, NVIDIA, Texas Instruments. So, but the interesting thing is if you don't want to do individual stocks, then there are some ETFs, which is AIIQ, AIQ, and robotics, which is BOTZ, which is it's a ETF. One of the things about these ETFs you have to watch for is assets under management. So while you're studying those, some of these ETFs are pretty small. Watch for the volume because you want to have a nice ask and bid spread. So for the pricing, but they do allow you to participate in the growth. So and rather than buying individual stocks, especially if you have a limited capital, I think these will be helpful. The second or the third theme for us will be the innovation, and the innovation that really, again, is expedited what we were going to achieve. So there were a few ETFs I'd like to introduce. ARKK, ARK. It's an actively managed, it's one of the very few which is actively being managed ETF, exchange traded fund, that is ARK. And they do basically do a great research. They do quantitative research and their performance has been unbelievable. And I think they will continue. So they have a very good management. The QQQJ is the NASDAQ 100 innovations called. So they look at innovative companies in the NASDAQ non-financial sector. 5G is the companies who are involved with obviously the 5G technology, which you can see it's just gonna revolutionize all the things that as far as because of the information technology, it has just making things so much faster. So that's a great place to be. And cloud, I still with the cloud storage, we will continue have that demand. As far as some of the stocks, we have from the tech to ICE. ICE is actually international exchange. This is for actually for trading, and the other ones are, you know, some of them are obviously like Salesforce. Insight is more of a biotechnology, medical, and then Adobe you're familiar with. So that's the idea for innovation. The fourth idea theme will be work from home. I think what has happened, I mentioned it before, structurally, the companies, not only the people have changed, the companies have also changed. And what is happening, people are feeling more comfortable, although a lot of times that we are social animals, so we need that interaction. But when we have that convenience to do things and we have the discipline, it has helped a lot of people become very efficient. And I think the companies have noticed that. So work from home is, I think, is going to be a theme for coming years. And it is not something that's just going to go away. Even after everything is open, I think the companies have learned their lessons that they can be lean and be more efficient. So in this theme, what we have is one ETF, work from home, but there's a few other ones. But some of the stock ideas I want to share with you, for instance, the GPN which is the global payment, for instance, network. There's a lot of things that are going to happen. Again, Line, Uber, Peloton. Still, you know, people have gotten, although the competition is coming in. Teladoc, TDoc, the Pinterest, Visa, and companies like from home. These are more of a manufacturing or infrastructure kind of things as far as the home business goes. GNRC is more of like a home generator or energy, and which is important if you're going to be staying at home, especially far away from the urban places. So we talk about Shaw and Mass, and these are more of a home improvement. So these are things, again, ideas, so you can really pursue more. The other theme is that it's our infrastructure. Again, what's going to happen with all the things going on with the, again, democratic administration coming in. I think would have happened anyway, but infrastructure is still definitely going to play a big role. The economy needs to pick up. We are still about 9 million under the number that we were in March or before March. So we have to create jobs. A lot of jobs that are being created are the jobs that they are more of a higher end. And as you know, the job numbers when they came on Friday, it was mostly in the leisure, in hospitality sectors was huge. And now the companies being more efficient, they see, well, one person can do two people's work. So that's why the government, I think, going to be proactive. Now, in that arena, I think you're going to look at some of the alternative and clean energy that's going to be playing a role. AWK is American Water Works, clean water. As a matter of fact, it's interesting talking about water. The CME group, which is the futures market, now they have come up with the futures on clean water. It's a California water, which basically looks at the drought, and they look at you can actually start trading the water futures. And as you know, in February we have the Ethereum, we have the Bitcoin. So, but this is one of the newest futures. So water is important. NEE is in the utility, but it's more of alternative energy that's going to play a role with infrastructure. The other ones are we're looking at the transportation of the things from CSX, from the trains uh, to the materials. So this is another idea. I think the infrastructure is going to play a role. Our other theme is, again, with all the states now getting involved with cannabis, and it's getting more accepted in the states. Federally, we are not accepted yet. So it is legal in Canada. So this is going to be a theme that is, again, once the medicinal acceptance comes into picture and the government gets involved, I think you're going to see a lot more activities, especially the larger pharmaceuticals. Right now, they cannot do anything. So they're just waiting for the approval. So again, with the Democratic administration, I think you will see more leniency, and that could happen. So with that theme, I thought to offer you some of the ETFs and the stocks in the cannabis arena. The biggest one, the two big ones, is MSOS and MJ. Now, the difference is MSOS has about 70 or 78%. These are multi-sector, but they have a large amount in the Canadian companies. So it's about 20-some% in USA, 70+% in Canada. MJ is about 47% in Canada. They have about 30% in the United States. They have United Kingdom. So these are the two big ones. So they also do swaps and with these two. The other three, the cannabis, TOC, and YOLO, they are smaller ETFs. Assets under management is small. So, but this idea, you can see that they've had a big move, obviously, especially after election. So these are just food for thought if you want to, rather than playing individual stocks like a Cronus, and then we have Tilray, and now we have like IIPR, which is actually the real, the farming and the real estate part of it. So the GWPH. So these are the stocks. If you don't want to play individual, the ETFs will do the job for you. Now, what happened it's amazing. Today is the 13th of January. We haven't even finished the second week, but with all the things going on in Washington and everything is happening, it feels like the year is over. I mean, it has been that intense. It doesn't feel like we just started the year. And with that in mind, I think the volatility is going to stay in the markets. So what's going to happen is we don't have that certainty thinking that, okay, now the election is over, vaccination is here, that things are, kind of coming to a conclusion. I believe these volatilities are here for us to stay. And with that, our next theme is looking at the minimum and small volatility markets or investments. So what I thought is like a low volatility. In that arena, we have four of the ETFs, which I will recommend. One is the SPLV, which is the lowest volatility stocks in S&P 500. USMV is similar idea. It's a low volatility of the US stocks. Then we have the VSMB, and that's also, it's a low volatility. The last one is the LVHD. Now, this is an interesting concept because with the LVHD, you have low volatility and high dividends. I believe they're the Templeton funds. So you're basically mixing those two together, and that looks pretty attractive. So it's a food for thought. If you like to put some of your, maybe on your retirement account that you're not going to be investing for really short term, that might be attractive to have a part of your portfolio in an ETF like that. Now, as far as the stocks go, we're looking at stocks that they have a really low beta. They're part of the S&P 500. I came up with few ideas. You can use your own judgment and do screening on them. But these are some of the stocks that it feels like they still have potential to grow, but they're not going to have the gyrations of the market. And from Charles Downing, CHD, to Colgate, to Donner, to Coca-Cola, McDonald's, Progressive Insurance, for instance, Verizon. So these are the companies that I felt that might be helpful for your portfolio again. Now, one of my favorite things, and I mentioned last year, I think when we've had our talks, was my outlook for the dollar. I felt with all the stimulus and all the monetary and fiscal stimulus going on, the dollar will be under pressure. And what will happen is, obviously with the lower exchange rates, it will do two things. Number one, a lot of emerging markets, a lot of other countries who have their debts in dollar, they will benefit from that because now they have to exchange, and if they have to pay their debts, they have to pay, from local currency dollar. They will have attractive exchange rate, but also again because of the potential of money maybe moving out of dollar to other exchanges and other countries for investments, that also it will benefit international investing. So I have some ideas for you, not on individual stocks, but actually, as I said, it's more of a theme. I thought on internationally what other ETFs and funds will be attractive. So I have a couple in the developed countries, the developed world. Both of them are Vanguard. It's the VXUS, which is Vanguard International, and what XUS is, it's investments outside the United States. So there's no US company involved with that. So that has done well, and I think will continue doing well. And then VGK is the Vanguard Europe. I think Europe has gotten, um, especially in UK, for instance, they've been becoming more value now, and I think you can find more opportunities in Europe than United States, in my opinion. As far as, obviously, my favorite place is emerging markets and frontier markets. Frontier markets are the even less developed emerging markets. So with that in mind, I thought some of the ideas that you could have is VWA, which it's a Vanguard Emerging Markets Fund. It has, most of you probably familiar with the EEM, which is the more noun, but as far as the expense ratio, VW has much lower expenses. We have the EEMX. EEMX is emerging markets, excluding China. So if you didn't want to have Chinese investments there, that would be one idea. EEMS. With the way the markets have been, we look at past 10 years. As you know, you look at your 401k, you look at all your investment returns, you see the majority of your growth or returns came from large cap growth. So we've had the large cap, we had the growth companies, they're leading well. So obviously the value had been underperforming for a long time, and small caps specifically. So it seems like that now we're getting back to the valuation. The last few months are indication that from actually end of June to December, that the Russell 2000 outperformed S&P 500. So you can see the rotation going and the value is coming to the picture. So it feels like emerging markets were not doing well. They were underperforming United States market or the developed markets. And small cap emerging markets, they could actually be a theme for the next few years. And I think based on the risk reward, although they are risky, but the reward might outperform them, especially if you're going to hold them for more of an intermediate term and long term rather than just a short term. So that's the EEMS. The EEMQ is also an interesting concept because what it does, it is emerging markets, but it is an internet and e-commerce part of the thing. So it's almost marrying the innovation and internet and e-commerce with emerging markets. And as you know, technologically, they are growing very fast. So that might be an attractive, again, alternative for you. And EMFM marries emerging markets and frontier markets. For instance, with this fund, the largest holding, they come from Saudi Arabia, for instance. So there's a big Middle East presence and also Asia. One of the themes I have, I'm very optimistic about Asia, and I think there's a lot of potential. I've been investing in them in the past year and a half, or actually longer, but with more diverting more funds. And my regional ideas would be, first of all, like an ETF like Vietnam. I'm positive of Vietnam. I think it will continue as there's more certainty, especially coming now. And even with the China's growth, Vietnam even going to grow more faster. And then Templeton Dragon Fund is a play. Actually, Vietnam is part of that portfolio. That's a closed-end fund. So you do have premium and discount. So the price is the net asset value and market value. So it works a little differently than exchange traded funds, but it is an attractive fund, has had a very good long-term returns. And ILF that's another theme that I have for you, is Latin America, with all the things going on, especially with the vaccination, what's going to happen. They're going to be a big benefactor of that if everything works out. They've had a lot of difficulties, and obviously with the politics of it, we look at Argentina, for instance, and then Brazil. We talked about what's happening in elections, is Ecuador and Peru, but I think there's a lot of potential. So these are my regional ideas. So rather than investing in individual stocks and worrying about maybe exchange rates, this might be helpful. Next is also based on the dollar. We've talked about this monetary situation and what is happening with inflation. Now, obviously, inflation is not there. The government or the Fed is going to try to keep it under 2%. But what is happening though, there is not, I'm not going to just talk about precious metals, which is here, but also metals as a whole. So we've talked about like, what I think about gold and silver. I think silver was really undervalued, and in March especially the gold silver ratio was actually the highest. I think it was, it went over 124, and average is about 70, 75. So silver, while gold hit the all-time high, silver never did. It was a half, 50% of what it was its all-time high. So I felt the valuation was in silver. Gold had done, it had a good year. I feel we need to consolidate now, but I believe the gold as a whole is going to do well. There is still concern about, what is happening with all the inflationary pressure from printing this money, although it could be gradual, but it is an alternative. It's more of an insurance, um, something that Bitcoin is not. Bitcoin is not an insurance, gold is. So I have some ideas. So rather than individual stocks in gold, I prefer to hold like GLD, almost 99.5%. They actually hold real gold. So that's important. And IAU and SGOL, your other alternative. For silver, these are the top two I will recommend. You can also play options on it if you want a leaps long term, if you want it, but these are good for platinum, PPLT, and PLTM. And DBP does all the precious metals under one roof, the same as the Canadian fund. It's a CE. This is a closed-end fund, and it does have gold, silver, and platinum as a holding. And these are not mining companies for CE, they're actual holding of the metal. Um, but also the theme that we've talked about in the past is the copper. Now, if the emerging markets, let's say especially China, and is the economies are start stabilizing and things are coming back, obviously copper has been giving us that message from going back to summer we've spoken. So I feel that will continue, and for that, these are the two funds, the JGC and copper. There's a couple of suggestions on the stocks. If you don't want to play, I'd still encourage you to play actual fund. But JGC and copper, these are not very big ETFs. I really liked, the Freeport McMoRan, which is the largest copper company, and Southern Copper, Southern Peru, um, uh, CCO. Those are attractive if you want to play actual the mining companies. Um, I also have used to be the Wheaton, precious metals is called now, WPM. They're not in the business of mining. They actually are the mediator. So they don't really, they are in the leasing and other things. So that's it. It's an attractive holding. If you like, the price has come down. POS is actually is the largest like silver mining. So if you wanted to explore that. Um, Now, obviously, the cryptocurrencies have been a big subject, especially after COVID. They really showed the value in that point of view of going away from real, actual money in talking about coinage, for instance, and paper money. So I remember the first, I was looking back, one of our first presentations, we were looking at about 8 months, 9 months ago, was at that time it was about 6,000. We were looking at Bitcoin. And as you know, we went over 40,000. So basically, this is here to stay with us. But the biggest thing is, I think, the blockchain technology is huge. We're talking about innovation. We're talking about, again, the technology. This blockchain is definitely important. So what I thought from that point of view, again, you have some ideas, and this is not for 6 months, a year from now. I think this is going to be with us. I would still, it's an infancy with the ETFs. Most people are familiar with the GBTC, which is not really an exchange traded fund, has not been approved. It has huge premium. So when the things move, it really moves, so you can make money. But that's when you have to be watchful. But there's a BLCN and Block. These are the blockchain technology companies. So it's a little different than GBTC. Bitwise just came out a couple of months ago. This is an actual ETF, which is, again, the asset under management is not as big. So, but that's another alternative. And this coin, this is a small ETF. So basically, these are some of your alternatives. If you wanted to do pure or related Bitcoin, these are the things which have been amazing movements. If you follow um, their charts, you see how fast, and they're not really purely Bitcoin. So, but they have been, a good conduit. Obviously, Square and PayPal, they actually, I would say they're innovation, they are technology, obviously, and also I would say they are more of a cryptocurrency relationship here. So that's something that I think looks attractive, and is something that I think will be staying with us for a while. So the last theme, I think, again, the consumer's behavior has changed. And what has happened, I mean, you look at the Amazons of the world and Shopify, and you look at all the people, Etsy, for instance, and these companies have completely changed. Wayfair. Um, so these are all the companies that online shopping, and people have had that convenience. They don't really, it's nice to go walk around the street, but now the convenience has happened, and that's, you can see the online retail has become very convenient. So I would say that this will continue, especially internationally. This is something to stay with us, and I look at an ETF, which is iBuy, and that one doesn't, it's not a huge, in the sense that has Amazon, for instance, in it. It goes with a smaller company, and for some other names that you might be familiar, might not. So I purposely didn't put like Amazon or Shopify or Etsy here. These are some of the companies you can explore on your own. So with that in mind, I hope it was helpful. It was just, the idea is, again, we don't want to be wrapped up in the individual stocks. I thought at this time it's better to look at again, we look at the economy, look at the theme, and then in the meantime, I still encourage you. I think, uh, as I mentioned, the days of just the passive investing is, in my opinion, is done. Although a lot of advisors, your broker, probably your financial advisor, manager, they want to, of course, we want to be buy and hold, because that's how the markets get rewarded. But I think for the decade of 20s, and that's one of the reasons we launched this, platform, is to make you more educated, to have the best of two worlds. You can be a good investor. You can invest for your long term, as I mentioned, your retirement accounts, and maybe it's accounts that you can actually have for intermediate term, but also have residual income. And that's what the trading can do for you, or swing trading using options, perhaps, and just learning about that technique. So you can have the, also, even with that, you could also have a hedging strategy with that. So with that in mind, I hope it was informative. I hope you learned something new. If and if you have any questions, we can go to our next segment. Thank you so much. Thank you, Sean.